we'll continue to see shifts to make economy of an STO make even better sense than it does now.
Hello everybody, welcome back to Value Tokenized.
Today we'll be discussing a process of making an STO in the United States with Sam Katz, co-founder of Security Token Lawyers.
Hi Sam, thank you for being with us at Value Tokenized today. And our first question will be, how did you join the blockchain space and what is your background?
So my background is a securities lawyer. I've been practicing securities law for over 15 years. And a lot of experience with publicly traded companies and private companies, different kinds of financings, IPOs, and all types of transactions. A little over about a year and a half ago, I was approached by a friend who was approached by a client who wanted to do an ICO of diamonds. And this was during the ICO craze, and everybody was doing ICOs. My friend said, look, well, this really seems like a security. It's backed by an asset. How could this not be a security? And we were both trying to think, understand how this could be done in a legally compliant manner, which at the same time, questions started to come up about the legality of ICOs generally. And we came to the realization that there were major legal issues with ICOs, the way they were being managed. Also, from looking at this diamond-backed token, saying, wow, there's a tremendous opportunity here for asset-backed types of tokens that are sold in a legally compliant manner. It was just a matter of time before we discovered a few of the early asset-backed tokens, funds, and we moved into the space that way. And through there, I became interested in blockchain, distributed ledger technology, and everything around it, and really saw the potential for changing not only the world, but the securities market in particular, and how securities are traded and how they're issued. We've gone from there.
What does it require for a lawyer to deal with security token offerings? Is there any specificity?
You do have to have an understanding of blockchain and some understanding of the technology in order to understand the details of how trading takes place and how the issuance works and what role the smart contracts play. There are many other elements that come in as well. You have to understand the different types of entities that could be used and different types of structures, because that becomes a very important factor in how the token looks, how it's treated, the tax aspects of the investment in the token. So you need to have a wide range of skills, but primarily securities law experience is very important, because ultimately it's a sale of a security. It needs to meet certain requirements, and you do want to provide sufficient disclosure for the investors about what they're investing in, and making sure that the investors are fully informed, not only about the company, but also about the risks involved in the particular investment. And that's securities lawyers know how to do that very well.
Do you think that law schools will soon be starting to offer courses in blockchain and security token offerings?
It's happening already. In fact, recently I gave a course to a group of lawyers who are looking to learn about blockchain and security tokens, and it was part of a much larger course, and it really brought lawyers from all different practice areas, not just corporate lawyers and tax lawyers who you'd expect, but many people wanted to learn about the new technology, and both from the technological perspective and the legal aspects of it. So that was actually a very interesting experience to be able to present that to lawyers.
A lot of people are now looking into doing a security token offering in the US, but the market is very complex. So why do people find it attractive?
People find it attractive for a number of reasons. I think, first of all, there's funds to be invested there, and I think you have a lot of very sophisticated investors. People who will see the value in the security tokens. It's not the same kind of speculative investment that you saw with ICOs, where people are looking to invest and then the price goes right up and you get right out and make a quick dollar. It's more long-term investing. So notwithstanding the fact that maybe it's complex in the US and you have to deal with many regulatory requirements, it's still a very strong market. And one other point I'll add, which I think ties the two together, is that people are concerned about regulatory uncertainty. And when it comes to security token offerings, there's actually, certainly for private placements of security tokens, there's fairly good certainty about the terms surrounding the issuance itself that people can be very comfortable with. So I think, from the US perspective, there are a lot of advantages.
So you are a security token lawyer, as we can put it. And what are your typical clients? Is it more about traditional businesses or just companies, new type of companies that look to fundraise in a totally different way?
I think it's both. We're seeing a lot of interest in real estate tokenization because it does seem like pretty good use case for this, because you have real estate, which is currently fairly an illiquid investment, where people normally now invest in a piece of real estate. They have to hold it for a number of years. They're really dependent on the sponsor. If they invest with a sponsor deciding to exit from the property, if they want to exit from the investment, even if they have an ongoing cash flow from, say, rentals, they're really dependent on the sponsor. Here, you're taking the same asset and saying, well, instead of buying a piece of a company that holds a piece of property, we'll give you a token, and you can trade that token. So you'll have liquidity. You decide you want to get out of the investment, you can get out of the investment when you want. So real estate's a very good use case. And then, in fact, another nice thing about real estate is that there's usually a cash flow that comes along with the real estate from rentals. So people also feel like there's a kind of a fixed coupon that they're getting quarterly basis, say, from rents. And then they also have upside at whenever they want, essentially, to be able to set the token. So it's a very good use case. We're seeing a lot of interest in real estate. Startups, less so. I think most startups that have the potential for VC funding still tend to go to venture capitalists. But I think that is shifting. I think that where there will be connections between the technology of the company and the token itself, we will see more startups, meaning there needs to be a good rationale for why this company wants to do a token offering and how it relates to its technology and what the company is doing. And then those kinds of startups will tokenize. I think we'll see a less kind of traditional startups in other areas that would go with the tokenization route.
What regulations currently apply in the US for security token offerings?
You have a few different regulations. Most importantly, you have the securities laws, which apply. And under US securities laws, you can't issue a security unless it's either registered or exempt from registration. So security token offerings either have to register, which is a very expensive process. That's kind of like a full initial public offering in the US. It's an expensive and long process. There are a handful of token companies that are doing that. They haven't also gone out with their offering yet. Or there are various exemptions from the registration requirement that the SEC allows. The most popular one is the private placement to accredited investors, which on the one hand limits you to accredited investors, but it also allows the most flexibility in terms of advertising and does not have a specific filing requirement with the SEC or a specific disclosure requirement as to what the content of the disclosure needs to be. There is a customary offering memorandum that people use, but there's no specific requirement by the SEC as to what you need to use to offer. There are other exemptions as well, such as Regulation A+, which you hear a lot about, which is a kind of a mini prospectus, as they call it. It also has to go through the SEC, but it's a shorter and more faster process than the full registration we spoke about before. However, as of the date that we're having this conversation, the SEC has not qualified any of these Regulation A+ transactions. There are tens of them with the SEC currently. There's also Reg CF, which is another exemption, which is crowdfunding, but that's only up to $1 million raised in 12 months. You can in both the case of Regulation A Plus and Reg CF, get funds from non-accredited investors, which is a nice advantage. But like I said, in Reg CF, you only have up to $1 million. That there are also, of course, anti-money laundering and know your client rules that are very important in the U.S. that you need to comply. Any shareholder or any from whom you're taking money needs to, or hold the shares, needs to have gone through the KYC AML process. So again, that's something that early days in ICOs, companies weren't very careful about that. Later on, companies then started to obtain that information about all of their investors. I mean, those are the two main issues you need to be concerned with. There's also tax, but that's a whole other separate discussion, probably too granular and not so interesting.
Do you think there will be any other exemptions appearing, or maybe new regulations for security token offerings?
From what the SEC has said, I don't foresee anything new for security tokens in particular. And like I mentioned earlier, it's not quite necessary per se. I think there may be some changes around the edges to adjust for some of the technological advances. So for example, right now there are requirements around having a transfer agent. So, and those are very specific. The question is, if you have something where that by definition makes everything extremely centralized. So if you want to decentralize, which is part of the goal here, we need to figure out how can we get around having a transfer agent. So in that situation, we may need to see new regulations to say, okay, instead of a transfer agent, you can use some kind of on-chain technology in place for a transfer agent, or even just to allow the transfer agent to monitor the chain and have certain rights with respect to what's on chain. So those are some examples. I mean, we'll also need to see in general, in terms of securities, where in the US, the corporate laws are governed by the states and not by the federal law. We'll need to see clearer state laws. And there's definitely direction here, allowing shares and other types of securities to be issued on the blockchain. Meaning right now, companies still need to have share ledgers. You can't just trade the shares without going back to the company and making sure that the company has updated the stock ledger. There's no such thing as what are called bearer shares in the United States. So we'll need to see changes. And it's happening slowly in Wyoming, Delaware, various states have made changes, but we'll need to see that advance more until we can see pure trading of securities themselves on the blockchain.
Do you think that utility tokens are dead, or it's just another class of securities that will continue to exist? And how are the regulations different for both?
I'll take it in two parts. I think utility tokens have a future. I think they have a very important role in both in the economy and I think from consumer and business side. There's a tremendous use case for utility tokens, and it would be a shame to see utility tokens disappear. And I don't think they should, and I don't think they will. I think we're going to find new structures for how utility tokens will be sold. It may be more consumer side, and people are spending a lot of time and energy thinking about how we can use utility tokens and issue them in a way that complies with the law, because they do have a very important role. If you ask me about whether there will be legal structures for utility tokens, I would say that there's likely to be, at some point, it may take time, newer legal structures for utility tokens, because they don't really look like anything that we've seen until now. I mean, for example, the SEC in these recent settlements with Paragon and AirFox, the SEC has required them to register under the Exchange Act under Section 12 as reporting company. So when you have an ICO company and you don't even really hold shares, the question is, what's the reporting going to look like? Because you're not even holding shares; it's a token that just represents the right to a service down the line. So how do you even make disclosures about something like that? Whereas the disclosure requirements that exist now are talking about basically pretty much equity or debt securities and things like that represent some kind of interest in the company or monetary obligation of the company, whereas utility tokens are something completely different. So I think we do need to see a different structure. I think the US will come around to it because it is a very important way for people to raise funds. I mean, I also think that, to add one last point to this, is that unfortunately utility tokens got a bad name because so many were scams and so many raised money on ideas that were unrealistic and said, okay, we're just going to raise this money and then we'll do all this development and we'll have this idea, even though it was just a 20-page white paper that somebody put together in 2 days. You have ideas that are better, that are well thought out and well considered, and maybe the development process has been completed somewhat, and you have a somewhat developed product. I think there's a tremendous potential there.
You have just mentioned Paragon and Airfox, massive lawsuits that were recently saw in the market. Do you think such news provoke anxiety and panic, or they promote a healthier and more serious attitude towards regulations?
I think it's both. There's definitely, if you look at the markets, and I'm a lawyer, I'm not a trader, so I don't look at these things that closely, but there is some correlation between these major SEC announcements and prices of many tokens. And you see the fallout over the week afterward. Interestingly, one of the things that I read recently was that Pantera Capital announced that they think they're going to have to get refunded 25% of their portfolio in their fund is going to be refunded because of these ICOs that are going to enter into settlements with the SEC and have to give back the money to their investors. That's a tremendous chunk, and that's a lot of tokens that will have to go through this process. So there's definitely concern. On the other hand, what the SEC did do, and this is really important, is offer a way out for these companies from their own regulatory uncertainties. It's okay, if you go through this process and you offer to repurchase securities from any investor who wants to, you can go and continue your business. If you still have money after that, go ahead, continue your business. We don't, you admit, that you weren't compliant with the securities laws and you didn't sell the securities either in a manner with registration or with an exemption, but we're giving you a pathway to make a successful company. So on the one hand, yes, there's going to be cost, and there will be many of these ICO issuers that will not survive, but there will be many that will survive because of this. And like you said, they'll have a pathway. And somebody who can do an analysis and figure out which of these issuers can really afford to survive this process might be a good opportunity.
Does an STO make sense economically versus a traditional offering?
It's a great question. The answer is, at this point, it depends on the type of asset that you're marketing. If for real estate, in a large real estate deal, it definitely makes sense. There's definitely, because of the value of the liquidity. They say that having a liquid asset as opposed to an illiquid asset can increase the value by up to 30%, if not more. So the value of the liquidity, if that's 30%, then paying the extra cost of the technology for the token up front pays for itself, in essence, in the value of the token that's being sold, because it's more valuable due to the built-in liquidity. In terms of, let's say, for example, real estate or even startups, there are so many standardized documents. Everything's pretty standardized, and the cost is not tremendous at this point. Moving to STOs, yes, because there's the additional technology element from the issuance platforms, that's an expense. Also, if you're marketing to a wider range of investors, which is different from your typical real estate deal, which is now marketed to pretty much people who the developers or the sponsors know, there's also the expense of marketing, which is something that you wouldn't have. But like I said, it very well can be worth it. And the interesting thing about the security token world is that the pricing structures are shifting constantly. And as we move further away from ICO structures, and we're starting to see the STO take on its own terms and its own procedures, I think we'll continue to see shifts to make the economy of an STO make even better sense than it does now.
What institutions should you consider when you're making a security token offering in the US?
You need to think about a few institutions. I think from a governmental perspective, obviously you need to be confirmed that you're in compliance with the laws of the SEC. When you're in the US, there's also state securities law requirements, which are known as blue sky laws. and you need to make sure you're compliant with those. In most cases, if you're doing an offering under Regulation D, Rule 506C, which is most offerings to accredited investors, those generally are by themselves compliant with state laws. However, when it comes to transfers of securities in the secondary market, state law requirements still apply. So you need to be mindful of state securities laws. There are also broker-dealer laws, aside from the issuance requirements, that you need to be careful about. And that really gets down to exactly how the tokens are offered, who's involved in trading. That's why we're seeing specialized token exchanges such as T0, Open Finance, who will comply with the broker-dealer requirements and the requirements of what's called the ATS rules in the US, and those will allow trading of tokens. I will also add that I do expect to see the major exchanges like NASDAQ enter into the security token exchange space in 2019. I've said this months ago, but I keep hearing about it more and more from other people because it's just a very natural movement for them. And I think as we'll see more and more securities being tokenized over time, they're realizing that they're going to have to be there in order to take advantage of that. We also have to be mindful of, like I mentioned before, FinCEN, which is responsible for money laundering. From that perspective, and I think anybody who's anything involved with blockchain or crypto is aware, you have to be very mindful about banks and complying with requirements of banks and ensuring that the bank that you're working with understands what you're doing and is comfortable with working with companies that are dealing with blockchain and crypto. Many banks, you go to them and anything on your website that says blockchain, they're like, not interested. Go find another bank. So you need to be very mindful of that as well. And I think in general, it's just important that there are other governmental entities, even investors in particular, we have to be careful about, because ultimately, one of the other things that we've seen in some other ICOs, and you do tend to see them in securities offerings, are investor lawsuits. And you'll notice that in AirFox and Paragon, those weren't brought by the shareholders. Those were brought by the SEC. But if in many situations, there could be shareholder lawsuits, and nobody wants to be unsuccessful. But in any situation where you have an unsuccessful investment, there's a chance of shareholder lawsuits, and which require a lot of time, money, energy. You have to be very mindful of that. So when you're working with a quality legal counsel, they'll take you through the documentation and preparing the right disclosure in order to make sure that everything's out there for the investor. So that's the best way to be protected against that.
You've mentioned security token exchanges. Right now, there is a chicken and egg problem on the market. So companies that are looking to issue their security tokens want more security token exchanges to list them. On the other hand, security token exchanges are waiting for more quality tokens to really launch and make it a mass thing. How do you think this problem is going to be solved?
What I think we'll need to see is large institutions and family offices come into the security token space and start investing in security tokens. And for that, I think we'll need to see quality deals, good assets. That's one of the reasons I think real estate has a lot of potential, because there's a lot of good quality assets out there. Once we bring money into security tokens, the rest will flow. Obviously, in order for exchanges to work, they'll need to have market makers. From what I've heard, those are coming into this space as well. Some market makers from crypto, I think, will shift over into security tokens because it's a natural movement for them. And then trading will happen. But we'll need the people to be the pioneers of security tokens, kind of take the plunge, prove itself. I think that's the bottom line. Just recently, Open Finance just went live out of beta.
Talking about investors, what does it require for an investor to invest in tokenized securities in the US? And why do investors might find this type of assets attractive?
Currently, you need to be an accredited investor to invest in almost all situations. There are a few tokenized offerings under Reg CF, which is crowdfunding up to $1 million. But in most transactions currently, you need to be an accredited investor, which means you need to have a certain amount of personal income, either $200,000 alone or $300,000 with a spouse, $1 million in assets. There are various other requirements for different types of entities. That said, why would people invest? Like I mentioned before, I think liquidity is a very key advantage of security tokens. I think that there's also going to be more information provided with respect to security tokens. I think that disclosure paradigms are going to shift with respect to security tokens. And the reason is that if you want trading, and this goes back to the liquidity point, that if you want trading in your assets, you need to provide information based on which there can be pricing on the assets. Currently, if you have real estate, we're very difficult to price because nobody really knows what it's worth unless you have information about the rent and the other properties in the area, and you provide that on a regular basis. Then people can start making their own assessments as to what the value of the property is. So I think we'll see more information coming out about tokenized assets. And I think that will also make it an advantage for investors. We'll have more transparency to the company and also more information on which they can make investment decisions, whether to buy or sell a particular asset.
Do you think that tokenization will be the democratizing force, and we will see more like unaccredited investors being able to invest in tokenized securities, or it's not likely to happen soon?
I think it will happen. I think that we'll see Regulation A+ security token offerings in the next few months. They may not have all the promise people had in terms of the use of distributed ledger technology and blockchain. That may be somewhat limited, but I think we'll see those soon. I think we'll also hopefully see the $1 million limit of Reg CF increased as well. I think that will happen eventually. And yes, there will be opportunities for non-accredited investors to come in. The flip side is that whether it makes economic sense for those people to invest in security tokens, and whether it makes economic sense for the companies to bring on those investors. So I think we'll have to see different types of companies and different types of investors investing in them. And the bottom line, it all comes back to this, is if you have a good investment and a good company with a good business idea, those will get funded. There will be interest in that. We'd love to see non-accredited investors have opportunities to invest in venture type companies, startups, where currently you have big venture capital firms in them. And I do believe that the tokenization for good companies will provide that kind of opportunity.
To wrap it up, can you give an advice for those who want to do a security token offering or tokenize some of their assets?
I think, first of all, it's important to find the right advisors who can help guide you through the process, give you a deeper understanding of the aspects of tokenization. There are many issues like token economy that people don't really think about, where you have a regular company. There are also lots of interesting structures that are coming out daily, and that can provide people with lots of different opportunities that aren't necessarily available to them from the traditional securities markets. Beyond that, just bear in mind that it's still a young market and it has a long way to go, but there's tremendous potential. And those who come in early will have, I think, many advantages in terms of being leaders in the space, getting their names out there, getting recognized for leading this space. And many of the big players in the space now started because they did their own work and they did their own deal and were able to expand that and take that beyond just their own company. And there are lots of opportunities for that. So I certainly encourage companies in the blockchain space to do that. I think that there's tremendous potential there for connections between security tokens and other types of digital assets that they might be working with, and the other things that are on the blockchain. And as I said, real estate is definitely a tremendous opportunity. It's almost, from my perspective, if you're selling real estate, it pays in almost any situation to at least explore tokenization, because in many cases you can just tokenize without any major impact, at least offer that opportunity to people. And it behooves any real estate developer or someone who's in real estate to syndication to consider that as well.
Our last question for today. How is the activities of advisors regulated in the US right now?
That's a great question. There are obviously lawyers are subject to their own ethical standards. In terms of advisors, you have to be very careful. The U.S. has broker-dealer rules, so anybody who's an intermediary in a securities transaction could be a broker-dealer and must be licensed. And there are lots of different questions along the way there in terms of what the role of an advisor might be in a security token offering, whether they're doing marketing, sales, how they're getting compensated. And advisors and companies need to be very mindful of that and get proper legal counsel to review all advisory relationships with that in mind. So it's a very good question and a very important question for people to consider. As with many fallouts from the ICO market, I think we'll see people like that who received fees also being sanctioned by the SEC for being broker dealers, for not having for getting fees and engaging in securities transactions without having proper licensing. It's just a matter of time, along with the issuers and the exchanges, as we've seen. They're also in the SEC spotlight as well.
Yeah, thank you very much, Sam, for this amazing overview of the US market and the regulations. Hopefully talk soon. Thank you very much.
Thank you.